It's time to get you updated on what's going on in the business scene. Welcome to Business Incorporated because it's 1:30 and it's Monday. I'm Ini John McCall. Let's tell you what you will enjoy on the program today. A worrying trend as institutional investors exit Uganda Stock Exchange. And good news for investors in Kenya as returns on fixed deposits surpasses inflation rates. And then we'll also talk about the plight of oil marketers as global oil prices surge. You're welcome. Let's get right into it and tell you how the markets are looking at the numbers for this afternoon at intraday. We can tell you that for Africa, it's positive. Good news there in major markets. Nigeria is up almost 0.5%, 0.49%, while South Africa is down 0.89%. And looking at other African countries there, the EJX 30 of Egypt is positive 0.42%, same like Nigeria. And Kenya is for Friday closed green 0.30%. Let's look at the Middle East now and see how that's looking at intraday. We can tell you that it's a mixed sentiment for the Middle East, beginning with the red right there. Abu Dhabi 0.64% down. Dubai is positive 0.12%. And then we look at other markets to see the numbers right there. Okay, yeah. Saudi Arabia is there, very bad, 0.85% in the red, and Qatar is positive, just to help a little bit there, 0.18% in the green. Well, as you know, we have a lineup of reporters in New York at this time. Ladi Williams told you a little bit about that. We'll delve more into that there you have them, their own Juliana, who will be speaking to us in a couple of minutes. And we have Larry Lassisi going about with the president. And we have Maria Bird, who is a resident in the United States. So it's her turf, and she's taking the most of all of this. Maria Bird right there will be sending in reports. Sent one yesterday. And Anne Waldo, as you know her, with Kaleidoscope, well, she'll be speaking to international personnel, and we're going to populate our airtime with what's going on there at ONGA. So you can stay tuned to Channels Television and ensure that we will keep you informed. We'll make it look like you are there. You won't miss a bit of what's going on in New York. And talking about Juliana now, she joins us to keep us updated. Juliana, well, we've kept you awake. I don't know how you're going to cope because Ladi woke you up at about, 5 a.m. or so? And now you are here again, Juliana. You are for us until you get back to London. But I mean, do you have any updates? I don't think activities have started yet.
Good morning, Innie. I've got coffee just out of sight. That's what's keeping me up at the moment. But I've got to say, there's also a lot of buzz and momentum on the ground. I wanted to give you a really nice shot of the streets of Manhattan, but it's a bit of a damp start, unfortunately, but hopefully it will brighten up by the time the high level debate takes place tomorrow, which is, of course, the big billing of the week. At the moment, I am at Concordia in the Sheraton. Concordia, I would say, is probably one of the biggest private sector bilateral jamborees that are going to be taking place at New York this week. We'll be seeing lots of private sector CEOs and environmentalists here talking about some of the initiatives and some of the policies that they will hope will be driving through 2024, because that's what this week is all about, really. The UN General Assembly is a one-of-a-kind gathering where, of course, you've got heads of states that come together, pretty well rehearsed, but they do use the platform to set the agenda for what their nation would like to contribute to the world. I spoke with Laddie this morning on Business Morning, talking about some of the headlines already, which is the notable absentees. Now, the permanent five of the UN have been labelled with not doing enough and being a little bit lazy when it comes to setting the pace on some of the big talking points of the day, namely Ukraine, namely the environment. We were hoping they would be here to set the record straight, but unfortunately they won't be here. We won't be seeing the UK Prime Minister Rishi Sunak. We won't be seeing French President Emmanuel Macron. Xi Jinping will not be here, as of course, we won't be seeing Vladimir Putin. But it is still going to be a huge jamboree, as you said. We've got lots of correspondents on the ground. We'll be doing a relay race, Innie, so I'll be handing the baton over to one of my colleagues. It could be Maria Lanray. Or Anne, of course.
Yeah, I mean, you guys are going to, because keeping up with the time difference is also one set of work for you guys. But let's talk a little bit about the theme. I know that should be dominating climate change. Obviously, the G20 meeting, we had climate change and we expect it to spill over, but I guess we cannot let out the theme.
Yes, that's absolutely right. It's a bit of a mouthful, but this is the 78th session, and it's rebuilding trust and reigniting global solidarity, accelerating action on the 2030 agenda and its sustainable development goals. So sustainable development goals is going to be another huge talking point this week. President Bola Ahmed Tinubu, he arrived about 18 hours ago. He is going to be involved in a series of high-level talks talking about sustainable development goals. And that is really why the UN General Assembly is such an important gathering for leaders of the global south. They're typically not invited to the other big events, such as the G20 and the G7. Yes, Nigeria were invited to Delhi a couple of weeks ago, but you generally don't get to see them, having a seat at the table. This is their opportunity. And of course, we know climate change has been a huge talking point, and whether or not governments are going to stick to some of the pledges that were made in Paris in 2015. Especially when it comes to making sure that nations in the global south are compensated, and so that they can use this money to mitigate against some of the awful fallout from the conditions that we're seeing, such as what's happening in Morocco or Libya. So the theme around sustainable development is going to be huge. Again, Ukraine is going to be a massive topic. We're going to expect a huge showdown. Volodymyr Zelensky, the Ukrainian president, he will be speaking and addressing world leaders tomorrow. This is only his second time coming to America. So yes, there's lots going on. It's going to be very, very exciting. Still very early, but lots to catch up on during the day, Innie.
Yeah, very early. But I mean, I can wait for when the presidents, I think that's on Wednesday, when the presidents will be ringing the bell at the exchange. We're looking forward to that very much.
I'm really looking forward to that. Of course, we're going to be there. Hopefully we'll be able to get a live signal. I think, a lot of people have got a lot to say about Nigeria at the moment. And yes, we are going through some very difficult, painful, as the ministers have described it, period to get us into some sort of economic prosperity. But in terms of, how we are being received on the global stage, I think there is a lot of buzz around Bola Ahmed Tinubu. He has a series of pretty significant bilaterals that are taking place today. I've had a small glimpse at the diary. It's always very easy and very difficult to get that. But I know that he is going to be speaking to heads of state from Africa as well as from Europe. And of course, we're expecting a meeting between Tinubu and Joe Biden. They did meet very fleetingly in Delhi. We got that picture of them standing together. Hopefully there will be a more robust discussion. I believe the Trade Secretary is coming into Lagos this week, actually. So that's quite interesting. And, there will be other meetings and other discussions that are taking place. But certainly Wednesday is going to be a big day for Nigeria, really putting us on the global map. The diaspora are doing very well. Of course, we are expecting the president to perhaps engage with the diaspora at some point later this week. But I think the fact that they've acknowledged his presence, this is Wall Street, and they are going to be asking him to ring that bell, does go to show that Nigeria is a significant player on the global map.
All right. Thank you so much, Juliana. We're keeping you busy, but I mean, it's interesting, and we're glad to have you. Do take care of yourself as you go about your duties right there.
Thanks, Innie.
Let's move on now. For the first time since Russia ended the Ukraine grain deal in July, Two cargo ships carrying grain arrived at a Ukrainian port over the weekend after traveling through the Black Sea. That's according to Ukrainian authorities. Joining us to give us more on this is Chiponda Chimbelu. He's a DW correspondent. Joins us. Hi, Chip. Good afternoon. Well, how do we see this affecting the war, knowing that this grain deal is very important, but it doesn't look like it's going to be revived?
Hello, Ini. Thanks for having me. Well, this development may very well create a dent in Russia's plan to weaken Ukraine by blockading Ukrainian ports and bombing them. Now, that has been Russia's aim because it wants to influence global food supplies and have a bargaining chip. Moscow has been trying to use global food supplies to get Western nations to lift sanctions, especially the one blocking Russia's access to the international payment system, SWIFT. Ukraine is one of the world's biggest suppliers of wheat, maize, barley, and sunflower oil. Any restrictions of its exports can have a major impact on global food supply and prices. But higher food prices also benefit Russia, which of course happens to be one of the world's biggest producers of wheat. In fact, Russia is expected to be the world's #1 exporter of wheat this year. That is obviously something that benefits the Kremlin. It needs the export revenues to help it fund the war it is waging against Ukraine. And of course, Moscow has also been trying to use wheat exports as a means of getting itself support on the global stage. During the last Russia-Africa summit, Moscow promised free grain shipments to 6 African countries, including Zimbabwe, Burkina Faso, and Mali.
So how do we see this affecting wheat prices?
Well, in terms of wheat prices, they are actually down from the record highs reached just after Russia invaded Ukraine in February last year. They're about half of what they were during that time period last year. And that's partly because Russia has had a bumper harvest, and it has flooded the global food markets with its wheat, which is leading to the drop in wheat prices that we are seeing. It is hard to say just what exactly the impact of more Ukrainian wheat exports could mean for global food prices for now. And that's because we're just talking about 2 ships making it to the Ukrainian port of Chornomorsk via the Black Sea for now. Whether this will be a reliable route for Ukraine to export its grain, now that is something that remains to be seen.
All right, let's look at the markets now. I wonder if this is sipping into the markets.
Well, European markets are expected to be subdued today. Investors are looking ahead to policy meetings from the US Fed, the Bank of Japan, and other central banks this week. And while we've seen better than expected factory output and retail sales in China, concern over the property market that is what is the world's second largest economy, of course, remains. Today, China's #1 private developer, Country Garden, faces another liquidity test. It has a deadline to pay $15 million in interest linked to an offshore bond. And we have to remember that Country Garden has already dodged default twice this month.
Yeah.
And markets will also be watching oil prices, which have been rising following output cuts by Saudi Arabia and Russia. And then, of course, there's also the historic strike by U.S. auto workers to keep an eye on.
Yeah, so many things to look out for. Thank you so much, Chip. All right, let's move on now to Asia, where markets slipped on Monday as investors look ahead to a week of central bank decisions. The U.S. Federal Reserve's decision is expected early on Thursday in Asia, while Australia's central bank will hold its minutes for its September 5th policy meeting on Tuesday. On Friday, the Bank of Japan will conclude its monetary policy meeting, and traders will be looking for clarity on when the BOU will start to shift its ultra-easy monetary policy. Elsewhere, the People's Bank of China is also expected to release its loan prime rates decision on Friday. In Australia, the S&P AX 200 started the week down 0.67, closing at 7,230.4, while South Korea's Kospi was down more than 1% and ended at 2,574.72. The Kazakh slumped 0.86% to 891.29. Hong Kong's Hang Seng Index slid 1.4% in its final hour of trade, while mainland Chinese markets bucked under the sell-off and rose, with the CSI 300 gaining 0.51 and closing at 3,727.71. It was the first gain in 4 days. Japan's markets are closed for public holiday. Well, I guess I should add that talking about central bank decisions, Nigeria's central bank decision will also be next week, beginning on Monday, and the decision will be announced on Tuesday. Let's have that on our minds as we take a break. When we come back here on Business Incorporated, we head to Africa. We'll give you stories from there. Welcome back to watching Business Incorporated here on Channels Television. Let's start with global oil. The benchmark Brent crude hovered above $94 a barrel on Monday, with investors focused on the prospect of a widening supply deficit in the fourth quarter after Saudi Arabia and Russia extended supply cuts. Brent crude futures rose 52 cents to $94.45 a barrel, while U.S. West Texas Intermediate crude were up 66 cents at $91.43. Brent and WTI have climbed for 3 consecutive weeks to touch their highest since November and are on track for their biggest quarterly increases since Russia's invasion of Ukraine in the first quarter of 2022. China, considered the engine of oil demand growth, remains possibly the biggest risk because of its sluggish post-pandemic economic recovery. However, a series of stimulus measures and a summer travel boom helped industrial output and consumer spending to rebound last month, and Chinese refineries ramped up output driven by strong export margins. Eyes will also be on central banks this week, including an interest rate decision from the United States Federal Reserve and eagerly awaited economic data out of China. There's growing consensus that peak interest rates are not far away, as inflationary pressures in general has been successfully mitigated, according to some analysts. Saudi Arabia and Russia this month extended supply cuts to the end of the year, but whether those cuts will extend into next year is uncertain at this time. And while there may be gains from that price surge, oil marketers face greater working capital requirement in the wake of combination of a spike in global fuel prices and the weakening of the shilling. The cost of shipping in petrol, diesel, and kerosene rose up 17.3% per cubic meter between the start of the year and last month, while the shilling maintained its drop against the dollar, setting up the dealers for increased cash demands to produce and hold stock. So it's a gain on one side and a loss on the other side. But let's make more sense out of this with Sunil Dixit. He's the Chief Technical Strategist, SK Charting, joins us from India. Hi, good afternoon, Mr. Dixit. Thank you for your time. So it seems we can't have it all good. Well, countries producing crude are rejoicing because oil is about $95, then oil marketers are suffering the impact.
The sudden spike in oil prices, there are some factors which we can attribute to, like the output cuts by OPEC Plus, that is mainly dominated by Russia and Saudi Arabia. They have announced their cuts are going to continue till the end of this year, 2023. So this creates some supply constraints. And on the other hand, we see one after another economic data from the US are showing good resilience. So the sense of optimism develops that creates a forecast of higher demand. And the top oil importer, we know it's China. And the way the Central Bank of China has announced reserve ratio cuts to infuse more liquidity in the market, that is going to create more demand. So on the one hand, there is a supply constraint, and on the other hand, there is optimism of higher demand. That creates a double whammy for oil prices. And I think this spike is going to continue for a while.
Really, because there's some analysts that believe that now we've seen Russia and Saudi Arabia maintain their cuts. I think they're going to the third month, and they've said they'll keep it to the end of the year, but that it will find a balance and may not necessarily have this spiking impact on prices continuously.
Yes, and we are going to witness high oil prices for quite a while going into fourth quarter as well. And the impact is going to be felt maybe in the next year, 2024 as well.
So where do you see it peaking? Where does it hit $120, for instance?
As far as West Texas Intermediate, the US oil, I think 93 and 96 are in the close vicinity.
All right. Thank you so much, Mr. Sunil Dixit, Chief Technical Strategist, SK Charting. Countries like Nigeria, I mean, we've even recorded revenue, an increase in oil revenue, even though our production has increased. So it's good for us also. But thank you for sharing your thoughts this afternoon.
Thank you. Thank you.
Talking about some good, if you're an investor in Kenya, you should be smiling now because return on fixed deposit beat inflation for the very first time in 15 months in July, signifying higher rates the lenders are willing to pay savers for long-term deposits as they compete for funds between themselves, the government, and collective investment schemes. Data released by the Central Bank of Kenya, CBK, reveals that banks paid customers an average of 8.1% for long-term deposits in July, surpassing inflation for the month, which stood at 7.3%. The difference between the two, which is the real interest rate, stood at 0.8% from a negative return in the past 15 months. Inflation, which measures the cost of living or the erosion of money over time, had been rising, reaching a 65-month high of 9.6% following geopolitical tensions, but has since eased due to a drop in food prices as supply of maize and several vegetables improved as a result of improved weather. A positive real interest rate of 0.11% was last seen in April last year, before the spillovers of the Russian-Ukraine conflict hit home, disrupting global supply chains and pushing inflation rates, especially in developing economies. In Egypt now, the Minister of Agriculture and Land Reclamation, Al-Said Al-Qasir, has signed an agreement with China's Deputy Minister of Customs, Wang Lijian, to start exporting mangoes for Chinese market. The agreement considers a starting point for enhancing the presence of Egyptian agricultural commodities in the Chinese market, especially after Egypt joined the BRICS group, according to a statement published by the Ministry of Agriculture. Mr. Ling Jun said that the Egyptian products in Chinese market over the past years increased by 30%, noting that Egyptian citrus currently occupies the second place among agricultural products exported to China from around the world. And still in Egypt, the chairman of Plan and Budget Committee at the Egyptian House of Representatives has announced that the International Monetary Fund has postponed its first review of the Egyptian loan program. The former advisor to the IMF said that meetings between the Egyptian delegation and IMF experts to conduct the review was originally scheduled for this September. He explained that it was postponed to allow IMF experts meet with the Egyptian delegation to discuss the first and second review together on the sidelines of the annual meetings of the fund and the World Bank, which will be held in Morocco from October the 9th to the 15th. The Executive Board of IMF agreed in December to provide a loan to Egypt worth $3 billion under a 46-month agreement. Egypt received the first payment from the fund in December worth $47 million, and the remaining payment was scheduled to be received following reviews conducted of the fund by the fund experts. And also talking about the issue of deregulation and the price of petrol seems not to have come to an end. The Independent Petroleum Marketers Association of Nigeria have been sharing their thoughts on how to make it work, especially on the sidelines of ongoing meeting or proposed meeting between labor unions in Nigeria and the federal government. It's on that note we'll say thank you so much for being a part of Business Incorporated today. We'll do it again tomorrow. I'm Ini John Mekwa. Enjoy the rest of your day.